Hello, I'm Nick Axford, CBRE's Head of Research for Asia Pacific, and today I'm joined by Petra Blazkova, our Head of Research for Singapore and Southeast Asia, to talk through the highlights and the outlook for the Singapore market. Hi Petra, thanks very much indeed for joining us. Let's start maybe by having a quick look at what's happening in the economy.
Hello, Nick. So if you look at the economic picture in Singapore, it was a fairly difficult year for the economy here, and the market just by a small margin escaped the technical recession in 2012. However, the demand for real estate actually remained quite resilient, supported by growth in services, which exceeded our expectations. But on the other hand, the manufacturing remains the weak point of the economy and the worrying side for the outlook and the whole of 2013. And we probably will see some impact coming from there as well.
So in terms of the way that sort of mixed economic outlook has fed through into the occupier markets, what have we seen and how has it affected rents?
Yes, certainly. Occupier market is always quite closely linked to the economic picture, and historically Singapore has been fairly volatile. Especially the rental market has been quite volatile, and the best example of that would be the offices. And especially in the recent year, we have seen some strong rental declines in the both very good quality office asset classes, as well as in the secondary or the decentralized grade B space. On the other hand, retail market has remained the most resilient out of the commercial real estate, and the rents have not really moved over the last 12 months. Lastly, industrial market is stabilized, and after some correction earlier in 2012, but we expecting some further changes in the sector given the weaker outlook for the manufacturing sector that I highlighted a minute ago.
Okay, just going back to the office market, sort of what have we seen in terms of the level of activity and particularly the level of demand and leasing activity from different parts and different sectors in the market?
As I said, the office market has been quite resilient and remained fairly active regardless the weak economic performance in 2012. However, there has been a certain shift in the sentiment and in the requirements from some of the occupiers. The best way to describe it would be some of the key transactions that actually took place in the market, and the three biggest deals that were signed last year. All of those took place out of town in a one of the large decentralized projects. So what we're starting to see is a shift of occupiers to the decentralized, low-cost locations. However, for Singapore market to remain attractive and remain strong and healthy, we need financial institutions. And as you see on the chart, that 2010 was the strong year for banks and financial institutions, which since has really not returned to the market. And we have to say that without those, the 2013, especially the second half of the year, when some of the large projects are scheduled to be completed, may be challenging.
And in fact, potentially some of that weakness coming through in some of the most recent numbers on the net absorption and vacancy side.
Yeah, exactly, Nick. Looking at the net absorption, what you see on the chart there is the annual total of 4-quarter total of net absorption for the office space, and that has remained positive throughout the last couple of years. However, after 4 consecutive quarters, the fourth quarter of last year was the first one when we have recorded negative net absorption, and that has reflected into an increasing vacancy rate and on an island-wide basis, but also if you would look into the individual micro markets and locations, the vacancy started to grow in all of those.
So just summing up on the office market then, headline, what's your sort of key headline thoughts about the prospects for office rents over the next 12 to 18 months?
Office rents, as I said, have corrected the most significantly since the last significant change in the market. And going forward, there are certain challenges that the market will still need to work through. Office rents over the last year corrected by around almost somewhere between 15 and 20%. And moving into 2013, we still expect that there would be some downwards pressure on rents, both in central locations and the decentralized space. And given the fair amount of new supply that will reach the market. However, the most of that rental pressure is likely to be reflected in the lower quality space in the asset that has not been refurbished in a long time, or they don't have the right locations. So the good assets should be a bit more protected than the grade B or grade C buildings.
Okay, great. And just finally, just turning to the investment market, in common with many countries around Asia Pacific in particular, we've seen pretty healthy investment demand coming through across a variety of different sectors.
Yes, I agree on that. The investment activity has been fairly robust, and especially if you look at the second half of last year, we had one of the 2 strongest quarter in a number of years. And the activity has been supported not only by the active Singaporean buyers, funds, and investors in general, but also internationally. And looking from where the investors actually have been buying, it's there is lots of interest in land sales. So the developers or the strata market has been fairly active as well. But on top of that, we have also seen a few very large en bloc transactions, especially in the office market, where the largest deal was just over 1 billion Singapore dollars, and it was a 30% stake of one of the key assets in CBD. So very, very active market, and going forward, we expect the activity to remain as robust.
And just finally, in terms of values, any thoughts on sort of what the outlook is from a capital value point of view?
The capital values, especially that it's a very mixed picture. If you look at the chart, each of the commercial asset classes is behaving completely differently. But offices is probably again the quite interesting one, which corrected marginally over the last year by about 8 to 10%. But at the last quarter, the values actually stabilized. And when we are starting to think what's going to happen to the values going forward, it is a fairly difficult call to make because Singapore has recently been going through a fair amount of cooling measures of the residential market to protect mostly the local buyers. However, there is fair amount of speculative money and capital in the market to be invested in real estate, and by cooling residential market, the activity is slowly shifting into commercial assets, which may put the pressure on values and may actually start with what we will start to see throughout 2013 is actually further growth in capital values, like in offices or industrial or the retail.
Okay, great. Petra, thanks very much indeed. That's all we have time for now. Clearly, there's a lot more that you could talk about in terms of the Singapore market. If you'd like to know more, please do visit our website and download any of our research publications. And of course, feel free to contact Petra and the team in Singapore. Equally, via our website, we do give you access to a wide range of different podcasts, presentations, and video broadcasts, available at www.cbre.com or through a variety of other channels. I hope you've enjoyed this quick discussion on Singapore and hope you'll join us again soon. Thanks very much.
Thank you very much and look forward to hearing from you.